Going once, going twice, sold! You're listening to The Property Pod.
All right, guys, welcome to The Property Pod. You are here with Aaron Horn, your host, and joined as usual, Patrick Berry and John McGregor.
Gentlemen.
How you
How
doing?
we doing?
Yeah,
Pretty
well.
good.
That was an interesting welcome by John.
It sure was, yeah.
Kind of mix it up. Gentlemen.
I worry every time about getting the accessible.
I worry every time John opens his mouth.
Yeah, that's why I'm going to leave it till last.
Well, we do have to start the show here, but we just have to reach out to everyone that missed out on the show last week. Things were quite hectic in the 414 offices, and I don't even have to say the 414 and First National offices anymore because
Nope, it's one and the same.
it's one and the same. So it's all happening over here. Both you guys have been flat chat with kind of getting everything off the ground here at the merged or the super. What are we calling it?
I don't know. Super office?
Super office?
The super dudes.
I see.
Super office. Yeah,
I'm a
I
big-
like that.
So let's not go super dudes.
It's kind of like in Brooklyn Nine-Nine where Boyle always comes up with the really bad names for their groups.
Which is funny you say that because that's what Abby and I've been watching every night at the moment is 9-9.
I was thinking of the movie Mystery Men, which is, to me, one of the most underrated comedy films. They came up with the Super Squad, which no one liked.
John, just so you know, you have referenced those guys at least 10 times.
I'm gonna for the next 10 weeks. I'll see if I can just find a way of squeezing that in there. I won't do that.
So give us a rundown of what's been happening in the real estate. Obviously, Australia's a bit of a divided nation at the moment. It's kind of strange that the states seem like they're almost separate countries. Like there's stuff going on in each state that is kind of hard to say. So what we'll try and do with us is we'll stick just at home and in Tassie. What's happening down here? How are we getting through?
It seems for us like I think we touched on before, there was a big month. It doesn't seem to be slowing at the moment. It again, like the best thing for locals is everyone just wants to get on with their lives, and I think that's just the best way to sum it up in the market for locals, as far as I can tell.
Yeah, no, it was really busy last month. It was really good to see lots of inquiries, multiple offers on different properties. So it's business as usual.
I mean, one thing that has been, have had quite a few more uptake in investors at the moment, considering just sort of cashing out, I guess you could say, because there's been such good, strong growth over 3-4 years. 10%, and that now starting to tailor off. I think a few of them now just reconsidering that they might want to move their properties on. The only problem is, though, is because they've been signing on 12-month leases, obviously out of concern to make sure that who knew what was going to happen with the COVID outbreak.
Yep.
Now, unfortunately, they're sort of locked into leases till March, April, May next year. There's been just a couple of properties that have been almost impossible to move, especially when you've had people that have really looked out for their tenants, and they're into paying well under market.
Yeah, this seems like a really tricky thing that I've kind of never understood until only recently, but the idea of looking after your tenants but almost harming your own well-being by doing so, sometimes by not actually raising the rents to kind of the market.
I might be a slumlord, but I just don't get it. You have an investment property, the goal is to make money out of it.
Yeah.
Yeah, no, it's just a funny one because, you want the idea of having a long-term tenant in and you look after them, make sure. And I know I was speaking to a friend on a golf trip recently, and what they were basically saying was that, they'd undercut themselves out of being able to sell their property because they'd kept the rent at $150, $200 below what the market for that region was.
Because that's one thing that's really important for people to remember too, is that you can't, and there's a sad reality where in the end we've always end up having our own best interests in heart.
Yep.
And so there's this tough balance of, like you said, wanting to be loyal to people to look after them. But at the other end, if their life circumstances change, 9 times out of 10, they're not going to care about you. And that sort of goes on both parts. So in order to, if you are looking from in terms of investment, like Pat said, it's really, really, really important to consider your exit plan. Sometimes I think where we've had, it happened recently with clients where their plan was, a couple months in, we'll just keep it as it was because everything's fine. And then 2 months later, it just completely flips on a head and they're stuck with it. We can't move it in what's a reasonable price because it was a property that was first home buyers or investors, but no person's going to, no one wanted to take on a lease that was nearly $100 below market rent for 5 weeks, even when we try to take it from the angle to say, well, look, by all accounts, you might be adverse to maybe $5,000 over the course of 12 months. So perhaps if we factored into that purchase price, you could then, that mitigates that loss of weekly rental return. But even when we're trying to played down that card, it was still really hard to encourage investors to buy it. And then the first home buyers couldn't buy it because they couldn't purchase it below market rent because it wouldn't value up for rental. And then also, too, they couldn't take advantage of the schemes because they needed to live with it for the first 6 months. So it's just, you know.
Yeah, so that's another point that you've raised there that I kind of hadn't considered either, is that you could, say, adjust the purchase price to cover any losses there. But then again, that's something that you've got to be able to, like I think, Pat, you've mentioned before, most investors or homeowners don't have this side, what did you call it?
It's just like
a slush fund.
A slush fund.
A slush fund.
Yeah, like a little extra side bit of cash for when things get tough.
Yeah, so if you don't have that set aside, you're not really thinking about, I guess we've spoken about mum and dad investors or set and forget investors.
Yeah.
That's another kind of situation where it's like, I've got one property. I don't have like a full matchbook of like thousands of properties because I'm a mogul.
Well, and that's sort of where I'm sort of excited to speak to our guest today, where, bringing Simon back, because on that basis, then I'd be interested to see from both an buyer's advocate and investors and investor advocate to say, well, look, if you were looking at properties like that, if they could still provide a good opportunity, but it's like not marrying up today, what would his advice be? Would it be a case of he's like, well, look, if you can still get $7 or $8 below market value on purchase price, but you have taken a hit on the rental for the short term, would that still be considered a good purchase?
Yeah, a really good lead in.
Because it's sort of from the salesman's perspective, I mean, we're basically trying to tell stories that might map to the person's wants and needs to purchase that home. But sometimes there's only so much we can do, and it's just unfortunately you're going to have to wait for a better time for our clients. That's sort of what a couple of our properties have happened to us recently. Yeah,
cool. Well, that seems like a good lead in to kind of get to our guest today, Simon. I'm just looking forward to hearing him gloat about the Brisbane Lions. I think that's
sports capital of Australia.
Oh yeah.
Yeah. Well, what about this talk of like the grand final maybe being played up there? I can't see it being played in Victoria.
Look, West Coast can win anywhere, so it doesn't matter.
He's flying high. All right, we'll duck off. We'll grab Simon on the line, and we'll be back very soon.
Nice.
414 Real Estate has been operating within the northern suburbs of Hobart since 2006 with their innovative approach to marketing and managing your property. They have all your property needs covered. Find out more by visiting them today at 414.com.au.
All right, guys, as we mentioned in the lead-in before, we've got a friend of the podcast back with us again, Simon Pressley from the sporting capital of Australia at the moment.
Well, Simon.
Sporting capital of Australia, right.
Well, that's what they're calling Brisbane these days, aren't they?
Thanks for having me back, gents. I've got to have a dig at you, affectionate dig. Last time we were talking was on the eve of the Brisbane Lions about to play their first final. And at that point, I think we'd run 11 or 12 straight. We lost the next two after our last conversation.
Mate, I can tell that's been burning for quite some time. We do apologise. Well, look, they've already won this week, so you're fine on that one. How does it feel to have them so high up on the ladder currently?
Ladder position. Oh, that's you can't not like that. The thing I've actually loved the most is living in Brisbane, and as you said, just about every team is relocated here. So. Brisbane, whilst the Lions haven't played much at the Gabba, I drove to the Gold Coast, which for me is about an hour and a half drive. I drove down there 3 times in probably 8 days to watch them play live down there at Metricon. So that's something that I would not have been able to do if not COVID.
Yes, it's been a silver lining on a pretty devastating year of 2020, but it's nice that some things can be kind of back to normal or kind of the new normal. It's not as full stands as regular, but it's nice to still see people in the stands cheering on their teams.
Yes, it's a bit different being there live. I must admit, there's quite a few things that when you're there in the flesh that you're still reminded that we are living in a different world.
Yeah. I guess pivoting from there, kind of how's things going in Queensland, where we were just describing before, that's kind of business as usual in a way down here. As you say, there's things that are kind of changed, but yeah, being an island state, we're pretty lucky.
Yeah. So how are you finding?
Yeah, look, I'd say Queensland would probably be very similar to Tasmania and South Australia and Northern Territory. Some things are largely, as normal, but we're all conscious. You can't not know with all what occupiers news each day what has actually happened, and of course there are certain businesses through no fault of their own can't operate or have to operate on a very much scaled back basis. So, but who knows? I've sort of adopted the attitude, plan for the worst and hope for the best. And for all I know, we may never develop a vaccine. That's certainly not what I wish, but no one can guarantee that we will or when we will. So I'm sort of made some pretty big decisions of my own as if this is the new normal for us.
That makes sense. Well, how's it affected from your business then? How have the conversations changed to investors or even purchasers for the clients that you're looking after over the last, was it several months now?
Yeah, so I mean, obviously 100% of our clients are property investors, and initially when COVID hit, I was like everyone else trying to get my head around, what does this mean? How's it going to affect things? So we sort of put things on hold for a week or two, just while we got our head around it.
Yep.
And then our focus was more trying to bring some calm and some composure to the discussion, because I'm sure you still would have seen the same headlines in Tasmania as the rest of mainland Australia saw. Everything was focused on we're going to have 20% unemployment rates and property prices are going to drop by 40% or maybe 50%. We thought we had a leadership role in really trying to just dumb it all down. And this is what it means, and this is how it's going to affect things, and it actually isn't going to be that bad.
Yeah, gotcha. Well, so now I suppose you've had the chance to. Well, all of us have had the chance to. Every state's experiencing something different. Hobart's obviously, for locals, we say that people just want to get on with their lives. Victoria's get hit really hard. I know my parents have got an apartment in Melbourne. Once before they were getting $520 a week. Now they had to drop it to $350. So obviously those centres are getting hard. But I mean, are they with the conversations with your clients now? So, are you finding there's been a lot more encouragement of buying opportunities, or are people wanting to seeking advice to stay the same or selling? Have you noticed much different in the activity on that sense?
I guess our volumes of inquiries have probably dropped off a little bit on what they would normally be, but not a lot. Once we got past that first, initial 3 weeks or whatever it was, but property prices have really held firm. There are parts of Australia that have actually, albeit small, but prices are still growing. And you'll be seeing that certainly at the affordable range in Hobart. I would have thought. I don't think you would have seen any prices reduce, and probably would have seen a little bit of growth, maybe not at the luxury end. Same as Burnie is one of the strongest markets in Australia at the moment. In the north of your state, Launceston is still strong, and large parts of mainland Australia, albeit small, they are getting some price growth. We haven't seen many locations of all that fear about lots of tenants going in arrears. I'm sure they're out there somewhere. I'm sure there'll be parts of Melbourne and Sydney that are suffering that, but large parts of Australia, that is not what's been experienced. In fact, a few of the markets we're active in at the moment, our local property managers just don't have enough rental stock to meet the demand. So.
Oh, wow.
So is that a weird sensation for the market? Like, obviously in the middle of the pandemic, you expect things to be going backwards, but is it weird to be having conversations that parts of Australia are doing really well and there is price growth, and to educate people that there isn't that doom and gloom out there?
Not weird to ask, because it's what we went on public record and said this is what we think will happen. We were probably the odd one out that didn't agree that prices were going to significantly decline, and articulated why we felt that way, and that's how it's unfolded. But the discussions that we have with clients, I suppose, a lot of them have been pleasantly surprised. It's all well and good for us to express an opinion. Anyone can say anything, but to actually, being able to sort of say, and here's why, and here's a whole bunch of evidence as to why they're not going to plummet, and why they have actually grown, and here's real life clients that actually did get a tenant before the property even settled. They're pleasantly surprised to hear those sort of real life stories.
So have you found more people maybe wanting to buy property instead of things like the share market, which is up and down at the moment as a result of everything happening in the world?
I think the longer this has gone on, the broader community have gained more confidence. I think a lot of people, might have got sucked up by the negative reporting initially, in April, May, and kept their powder dry. But when there's a couple of months of evidence showing that hadn't happened, and there was actually a little bit of growth, some people have come out of the woodwork and now feel they've got the confidence to enter the market and get on with their life. It's always, as I say to anybody, in or out of a pandemic, the best time to invest in your future is always as soon as you can afford to. The key question is, it should never be when, it's always where. This is a very, very big and diverse country, and in or out of a crisis, there's always going to be a lot of locations that market conditions are good for investing in.
So speaking of where, I was looking at one of the Propertyology reports that you've recently come out, and you've kind of put forward the notion of this mini capital city idea. I was intrigued to find out more about that.
Yeah, so obviously it's not in the Oxford Dictionary. It's a propertyology phrase that we use it to try to, I guess, come up with a simple word to articulate. There are a lot of people who've only ever lived in a capital city, especially the 10 million people spread across Sydney and Melbourne. A lot of those have only ever lived there, and so understandably for them, their home is their normal, and think that the rest of the country. Some people think the rest of the country is a dust bowl and there's nothing there. But there are large parts of Australia that we describe as a mini capital city. So what we're saying is they've got all the essential infrastructure. They've got universities. They've got good retail options. They've got affordable housing in spades. They've got an airport, with daily flights to, lots of different parts of the country, tertiary education options. That's everything that a capital city's got. But instead of having 10 Westfield shopping centres, there might be 2, but it doesn't really lack anything. So that's what we call a mini capital city, and it needs to have a diverse economy. So it's not a one industry farming community or a one industry mining town or something like that. It does have a legitimate diverse economy, which again is, what people refer to as a capital city from an investment perspective. There's probably 40 odd mini capital cities throughout Australia. In Tasmania, Launceston is the perfect example.
Right, okay.
I think I saw, sorry to cut you off, John, I think I saw you stated on, I think it was yourmoney.com, an interview you did with those guys. I think 33 of the regional locations had equal or greater to population growth in the past period. Yeah,
there's actually, this is before COVID. The trend will accelerate post-COVID, I think. But there are lots of locations, in most states actually, where people are actually leaving. There's a decline in population from capital cities due to what's called internal migration. So that's an existing Australian resident that, let's say, lived in Sydney last year and decided to, totally relocate the family to a different part of the country. That's what us data nerds call internal migration. And so the 12 months ending last financial year, or June 2019, 5 out of 8 capital cities had a population decline to internal migration.
Yep.
And one of the 3 that had population growth was Melbourne, but it was 0.01%. So really it's only your home city, Hobart, and Brisbane, of our capital cities that gained population from internal migration over the
that'd be
last
the AFL players.
There must be something there, surely.
No, yeah, I guess my thinking was, do you think that's going to grow again with this kind of idea of living on top of each other? Maybe isn't the best thing with the global pandemic.
Yeah, I've got no doubt about that, because as I said, the trend, it's been growing for a good, few years. Our 8 capital cities have actually had a total population decline of 53,000 people over the last 3 years to internal migration. That's a big figure. That's nearly all of Launceston, that's been ripped out of, 8 capital cities just in the last 3 years. And with the pandemic, the virus breeds in congestion. We all know that with what's happening in Melbourne at the moment. It also is an attack on household incomes. So there'll be lots of people who will be seriously already, I think, thinking about relocating to a part of Australia that's got a nice lifestyle, that's got a comparable quality home, but with a much smaller mortgage. and employment conditions are not as congested. So that's going to open up all sorts of non-capital city opportunities for people.
Also, with the pandemic and everything that's happened on that front, do you think the fact that more people can work from home and the businesses have recreated the way jobs can be done will open up those regional cities to be more accessible?
Yeah, absolutely. That I guess the fast speed internet, that's sort of been progressively rolled out across Australia over the last 5 or 6 years, had already seen some businesses do that, but a small percentage. And I certainly think during the lockdown period, there'd be many households, many businesses that would have been trialling something that they'd never done before. I know that I had never used Zoom until late March. I'd done plenty of things on Skype, but I'd never used Zoom before, and now I probably use Zoom 2 or 3 times a week. And during the isolation period, our own business, Propertyology, we actually made a formal decision. We're not going back to our office.
Oh wow!
Right. We're on the for a period of time there we had to work from home, and we embraced technology. And what we found was that not only could we work just as effectively by embracing technology and not being in an office, but when you're 2IC, when you're sitting down having a coffee with him and you sort of say, how have you found working from home? Because he'd never done it before, and immediately he had this big smile on his face, which is not the reaction I was expecting. And he then followed by saying, Simon, I've just worked out with my wife, I have an extra 12 and a half hours in my week by not having to commute to and from home to work.
Yeah, wow.
12 and a half, think about that. Yeah. 12 and a half hours is more than a full day every week.
I'm going to take a guess that he doesn't have any kids at home that he was house sitting.
He does.
Oh, rubbish. Because I had a completely different experience. I was keen to get out of there.
But that's why I was surprised when he started answering his question with a big smile, because I knew initially he was struggling trying to work with a couple of young kids. But, they got into a new routine and that was actually going quite well. And the kids had actually settled down by having mum and dad home a bit more. So 12 and a half hours,
That's amazing.
You can't manufacture time, can you? But we found a way to do it.
Well, that's 12 hours of quality time too, not just I've got to go, I'm rushing. It's like that's 50 hours of that's nearly how many 500 hours over the course of the year, So it's a phenomenal amount of difference that could have an effect on the family just by being able to be present, just because of no travel time.
Absolutely, and there will be people, if not already, there will be people contemplating working from home permanently, and then they'll take that one. Some people will take that one step further and say, "I can actually work from home." And then now, where do I want it to be? It doesn't have to be here, especially if you're someone with a big mortgage. There'll be people sort of saying, "I could be living in a dwelling as comparable quality to this, if not better." Don't be surprised if you get lots of people from Sydney and Melbourne that want to finally act and relocate to Tasmania. We all know that it'd be crazy not to. It's beautiful down there.
Very true, my friend. Very true.
Well, and how's it? Well, then on that, so the way you described it before, these mini cities, it's in some ways no different than the fundamentals that you've spoken to us about before, where you said diversification of possible industry, good access to services, etc. Are you considering then with the places you're advising your clients to that those centres are now just actively working at creating these new opportunities because things have changed, or they were always a natural progression? It might be too big a question to ask, but then is that sort of what you're tracing now? Is it stuff that's happening now, or are you still looking for future focus for people's investments?
Yeah, no. So already, over the last 5 years, we've already invested in places such as Launceston, such as Orange is a mini capital city in New South Wales, Bendigo and Ballarat are mini capital cities in Victoria. In Queensland, some mini capital cities include, Cairns and Townsville and Mackay. So there's about 40 of them all up, and we'd already invested in many of those over the last 5 years. And I think, in fact, I'm certain that it'll be locations like that and others that will benefit from an acceleration of internal migration that perhaps wouldn't have been the size of what it's likely to be if not for the coronavirus. There'd be an additional driver for property markets, we feel.
Yeah, fantastic. Well, there was one specific question I wanted to see what you'd take on it. So we a lot of our clients obviously rushed to make sure that they had long-term leases in place as the virus went into play. But in Tassie especially, because we found out the business returned to normal quite quickly, they realised, well, oh, hang on, I still want to be looking at selling. And so if you could give the advice, so you're looking to purchase for someone, and in this particular case, the property is let for about $110 below market rent, and they've got a 10-month lease in place. It is a first-home buyer investment home. The first-home buyers can't really purchase it because they didn't want to let it in the first place and they can't get into it. And then just the general investor doesn't want it because it's so severely underlet that they don't want to bite on those numbers. So then we had this conversation to say, well, look, you could say to the investor, look, well, what if you adjusted your purchase price by say $5,000 to mitigate that that difference for the lost rent? Maybe we could still make that work and get that rent increased in 12 months' time. From you as an advisor going to client, what sort of a conversation would you have? Would that be something you'd consider, encouraging your clients to buy, or would you just say walk away, or would you come up with a strategy? What might you do in that situation?
So if I was the owner of that asset and for whatever reason desperately wanted to sell, I can think of two practical options. One is you've mentioned already, to be prepared to offer that property up to a willing buyer at a few grand lower than what they would normally expect to pay for it. So giving them some financial compensation because they can't do what they wish with it if it was under normal circumstances. Or the other, I'd be talking to my tenant about the possibility of helping them find somewhere alternative for them to live in, whether that's actively helping them find another property or whether it's more practically agreeing to pay for them to break the lease. That's what I would be seriously doing. If I was the buyer, well, obviously, if I'm a first home buyer, I can't buy that property while there's someone's living there because I'm not eligible for the various grants. There's going to be an income stream coming in on it. But if I was a general owner occupier, you'd still consider it, but only if you'd really, really wanted to. If it absolutely had to be that property, I guess it'd be weighing up. Could I still buy that property today and just accept the rent for the next 10 months and then move into it? Now, I don't imagine that many owner-occupiers would be prepared to do that, but who knows? If they desperately wanted that property, that's a term they might consider. But
what about then as an investor? Would just be cost averaging it out and think, well, the capital growth over the long term is worth it, or would you just say, look for another opportunity?
As an investor, for us, the property itself and, more importantly, the location, the town or city needs to tick Propertyology's boxes, and then the individual property asset needs to tick our boxes. So if this property ticked those boxes, there'd need to be a financial compensation of sorts for us to still buy it. Yeah. Now, if we're looking to do that in a market where there's very limited good quality properties currently listed for sale, and I believe that's still the case to a large degree in Hobart, then we would be, very open-minded and thinking laterally and hoping that the person selling that property also had that same mindset and trying to structure a deal. As that buyer, maybe we were the only buyer that would be prepared to be flexible, and take on that property at a lease that's well under market rent. We want to be compensated in some other way. So that might be a $5,000 price discount or something like that.
Yeah, that makes perfect sense. No, thanks for that.
I guess there's no get out of jail free card on that one, John. You've gone to the top, and it seems like you've still got a bit of a pickle on your hands. Yeah, no, it is just a fascinating conversation to have with them because it's that they are sort of prepared for the worst and got in that, but then at the same token too, then quickly change their mind because circumstances change. It's like, what do we do?
What do we do? Yeah. It's like, well, this is our options, Yeah,
interesting.
I'm a big believer. You guys sell property for a living. We buy property for a living, and we need each other. But for a negotiation to happen, I think both parties need to feel like they've had a win. Yeah. As soon as one buyer or seller, as soon as one feels like, no, I'm getting ripped off here, the deal often isn't done unless one of those parties is in a real desperate situation, which, as you guys know, doesn't happen all that often. So, yeah, just about finding a mutual ground.
Yeah, exactly.
All righty, mate. We greatly appreciate your time. We know how valuable it is, and we've got to jet off. We just want to say good luck to the Lions moving forward and hope we haven't put the hoodoo on them by by having you join us again. I'd feel horrible if I'm really going to watch the game closely this week.
It's always great chatting. I really hope that our borders will open up soon. We've actually planned a trip. We hope to have Christmas in Launceston. We actually booked that probably January last year. At this stage, I don't think we can get a flight into Tassie, but still several months away. So let's be positive and see what happens.
Absolutely.
Well, if you do end up here in Tassie at some stage, we'll have to catch up and have a beer.
I'll definitely take you up on that.
Sounds good, mate.
Excellent.
Awesome. Thanks, Simon.
Cheers, mate.
Good on you, Jen. All the best.
Cheers.
Alrighty then, it's always a pleasure to have Simon on the show. He could probably talk with marbles in his mouth underwater, that bloke.
But it makes our job easy because we don't have to talk.
He just knows his stuff, and he's just
that's
so,
what I like about it.
He's so good at articulating it. Like, even as a layman, I can understand exactly what he's saying, and kind of as he was leading into the things, I was like, this is a layup for the question I had. Like, I really wanted to know if this...
Well, I suppose the reason why I like his opinion first is that it really is coming from an economics perspective to begin with data, and then builds a story on top of that. So it's not just opinion what he feels like. It's like, well, actually, this is what the data is saying first, and then he does bring it to a way that you can like converse and understand very, very simply.
What I really like is he always talks up Tassie, but then at the same time he probably does that when he's talking to someone in, Victoria. That place is fantastic. I'll come there tomorrow. What do you get?
No, look, we greatly appreciate every time Simon gives us some of his time. He's a friend of the podcast, and anyone out there, check out Propertyology online. You can Google it, or we'll pop some links in the show notes to that. Always a pleasure, guys. Glad that you got your question somewhat answered, John, but I think you still got a bit of work to do.
It was because I knew there was never going to be an easy out. I was just interested to see from an investor's advocate.
Yeah.
What I really liked about it, John, is Simon charges for his time, yet you got your answer answered for free. It's like, I'm not paid for Simon. I just build it into the podcast.
Yeah, that's the point of the podcast, isn't it, right?
You can expect the invoice coming very soon, my friend.
Oh, why did my emails just go off? Son of a bitch.
All right, guys. Thanks for joining us on the Property Pod again. We'll talk to you all next week.
Catch you later.
Bye. You have been listening to The Property Pod, produced and edited by 414 Media House in conjunction with 414 Real Estate and McGregor First National Propriety Limited.
This podcast is general information only, and the thoughts and views expressed is the opinion of our panel, and listeners should always seek and use their own investigation into any topic we discuss to ensure they fully understand their own situation.
It does not constitute and should not be relied on as purchasing, selling, financial or investment advice or recommendations, express or implied, and it should not be used as an invitation to take up any agent or investment services. No investment decision or activity should be undertaken on the basis of this